Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is July 19th, 2025. I am Luna.
I am JP Morgan.
But underneath that calm surface, there's actually a lot going on. We're seeing three really big, sometimes conflicting stories shaping things. So today, our mission is to take a deep dive, pulling insights from the JP Morgan and Luna daily 5-minute briefing. We want to figure out what's really happening with the major new crypto law, a surprising Fed signal, and yes, trade tensions again, and crucially, what it all means for you. Okay, let's kick things off with crypto. There's this landmark Genius Act that just got signed, first federal framework for dollar stablecoins. What's the really interesting part here? I hear it mandates 100% reserves in cash and short-term treasuries, plus monthly reporting.
Yeah, exactly. And what's fascinating here is the validation this gives digital assets. It's huge. By demanding those full reserves and, the transparency, it basically builds a foundation of trust, a regulatory blueprint.
Yeah.
We're already seeing forecasts based on this suggesting the stablecoin market could explode. Think going from about $260 billion now to maybe $2 trillion by 2028.
$2 trillion, wow.
It's a massive number. And if you zoom out, it helps explain why stocks like Robinhood jumped over 4%, Coinbase up over 2%. Even Bitcoin hit a new record, over $120,000. It all points to more mainstream acceptance.
Okay.
And sort of connecting the dots back to traditional finance, this likely means a big jump in demand for short-term U.S. Treasuries to actually back all these stablecoins.
So translating that, what does this all really mean for you, the listener? Is this just crypto becoming, less Wild West?
That's a good way to put it. It's crypto maturing, moving into a more regulated space. The opportunity, potentially safer, maybe even insured ways for everyday investors to engage. Broader access, maybe more stability. But the risk, or maybe the caution, is still about prudent risk management, right? Stablecoins are still linked to crypto's volatility. So, starting small, diversifying, that's still key as things evolve.
Got it. Okay, let's pivot from digital assets to the Fed. Governor Christopher Waller, he's a voting FOMC member, right? He apparently signaled something pretty surprising about rate cuts.
He really did. Waller made probably his strongest case yet for cutting interest rates right now, like at the July meeting.
Yeah.
He even hinted he might dissent if they don't cut, which is significant given he's often seen as, more on the hawkish side.
And his reasoning.
Two main things. First, private job growth slowed way down, only 74,000 in June. That's a big drop. Second, he basically sees inflation as having peaked near 2% if you kind of look past any temporary tariff noise.
Okay, so a voting member basically says cut now. How did the markets take that? Must have been quick.
Oh, incredibly fast. Traders immediately up their bets for a July cut. It's over 50% probability now, largely just on his comments.
And specific assets.
You saw short-term bond yields fall. The 2-year Treasury yield dropped about 6 basis points. Gold prices also jumped, benefiting from those lower rate expectations.
So for investors, this sounds like potentially good news for asset prices.
It's kind of a double-edged sword, actually. Yes, a sooner cut could support stocks, gold, things like that. But it also tells you the Fed might be seeing some real cracks forming in the economy. And that could be negative down the line, especially for investments sensitive to economic growth.
Right, a potential warning signal hidden in seemingly good news. Okay, so while the Fed might be thinking about easing up, another old worry popped up again. Trade tensions, reports that President Trump is pushing for a 15-20% minimum tariff on all EU imports. Feels like we've been here before.
Yeah, that definitely rattled Wall Street midday. Stocks took a brief dip when that news hit. Analysts are already reacting. Fitch Ratings, for example, raised their forecast for the effective U.S. tariff rate to nearly 19.4% if this goes through.
And companies are feeling it.
We saw some immediate reactions, like 3M stock fell almost 4% after they specifically mentioned expected tariff impacts hitting later this year. Now, the market did manage to climb back by the close, but it's a clear reminder this is a major headline risk out there. Sentiment can turn on a dime with this stuff.
Absolutely. It just reinforces that need for, continued vigilance from investors. Tariff news can whipsaw markets and really squeeze company profits. So putting it all together, that flat market finish we saw makes a bit more sense. It's this tug of war, isn't it? Encouraging signs from crypto rules and maybe easier Fed policy.
Right, balanced against this renewed uncertainty from the trade talk, the saber rattling. And if we connect this to the bigger picture, the takeaway for you is really about watching those core economic numbers closely. Things like consumer spending data, weekly jobless claims, those real-time indicators. They'll help you gauge if the market's optimism is justified, especially if a tit-for-tat trade fight really heats up.
Okay, so here's something to think about. How might this really unique policy mix, a Fed potentially looking to ease policy while trade policy tightens with new tariffs, how could that reshape the economy and, maybe more importantly, your portfolio in the months ahead? Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.